Bitcoin Ordinals, or NFTs, have been gaining traction since their launch in January. The number of inscriptions has reached an all-time high of 31.692. The majority of these digital assets include texts, audio, applications and images, with text carving dominating the majority of inscriptions. The milestone was reached due to the introduction of BRC-20 execution, which offers a way to mint and transfer assets within the Bitcoin blockchain. Furthermore, the recent rise in adoption can be attributed to the public revelation of how to make fungible meme coins from ordinals. Despite the success achieved with the BRC-20, participants are advised to remain cautious and not to waste money on mass minting. It is encouraging to see that the Bitcoin ordinals and inscriptions have been adopted by the public, with the number of inscriptions reaching an all-time high of 31.692. It is especially impressive to note that this was mostly achieved through text carving, with most of the inscriptions appearing after the BRC-20 execution. It took only 6 weeks for users to figure out how to use ordinals to make fungible meme coins. The increase in adoption of Bitcoin ordinals and inscriptions could potentially be linked to the public revelation of how to go about minting ordinals and creating fungible assets on the blockchain. It is important to note that although the BRC-20 is still in the experimental stage, it offers a way for ordinals users to mint and transfer their assets within the Bitcoin blockchain. Despite the success achieved, it is important to remain cautious and avoid mass minting, as these digital assets may be worthless. Furthermore, due to how some inscription tools are set up, the balance may be minted to the intermediary address used in the process. Overall, it is encouraging to see the progress that has been made in the adoption of Bitcoin ordinals and inscriptions, and it will be interesting to see how it continues to develop in the future. Ethereum name system is a decentralized platform that is revolutionizing online identity. It is leading the movement of transforming how we know about online identity by mapping Ethereum wallet addresses to human-readable names. ENS Labs is funded by the ENS DAO, a decentralized autonomous organization that controls approximately $66 million in assets. Sign-in with Ethereum is an open-source standard created by Gregory Rocco and Wayne Chang that seeks to disrupt traditional login verification. BNS, Lens and Polygon ID are self-sovereign identity naming systems competing with ENS. They offer users the ability to securely own their identity across the internet. This article provides a comprehensive overview of the development of Ethereum name system and its implications for global identity. It highlights the features of ENS, such as the ability to map Ethereum wallet addresses to human-readable names, and its use of a similar technology as the domain name system for the internet. The article goes on to discuss the potential for ENS to disrupt existing login verification services, its mainstream adoption, and the competition it faces from other self-sovereign identity systems such as Bitcoin naming system on Lens. In addition, the article provides information on how to purchase a self-sovereign identity, and the possible implications of its adoption. This article provides an in-depth look at the development and potential of ENS, and is a useful resource for those interested in learning more about this evolving technology. The shutdown of 2 members of the Federal Reserve System is causing ripple effects in the crypto ecosystem. Particularly, this is affecting Circle, the payment services company that operates stablecoin USDC. According to Circle, $11.4 billion, or 26% of all USDC reserves, are held in the form of cash at reserve banks such as Silicon Valley and Silvergate. This has led to a withdrawal of $3 billion in USDC from centralized exchanges in the past 7 days. Wallets with the highest balance of USDC belong to large entities in the crypto space. This indicates the reliance of these entities on USDC to hold value. This article provides an examination of how the shutdown of 2 federally insured members of the Federal Reserve System, Silicon Valley Bank and Silvergate Bank, is affecting the crypto ecosystem. It specifically focuses on the impact on Circle, the payment services company that operates the stablecoin USDC. According to Deloitte's accountant report of Circle, a significant portion of USDC reserves are held in cash and reserve banks such as Silicon Valley and Silvergate. As a result, Circle has had to move some of its USDC reserve deposits out of Silvergate and into other banking partners. The article also highlights the impact on USDC, which is the token with the largest negative net flows from centralized exchanges in the past 24 hours. It also notes the wallets with the highest balance of USDC, which demonstrates how large entities in the crypto space depend on USDC for value. Despite a brief dip below the $20,000 mark overnight, Bitcoin quickly recovered. Some analysts believe that the situation involving USDC's loss of part of its reserve funds was manageable. Despite increasing bearish sentiment, some commentators argued that this could lead to a short squeeze in which the price would rise. This is an important point to consider as the cryptocurrency market continues to be volatile and unpredictable. This article provides a comprehensive overview of the current state of the crypto market, detailing the events leading up to the panic and the market's reaction. It also provides expert opinions from popular personalities, as well as a potential short-term outlook for Bitcoin. The article is well written and easy to understand, providing a clear picture of the current situation. There are various ways of staking ETH, ranging from staking directly with Lido Finance to utilizing auto-compounders and liquidity pools to gain higher yields. Experienced investors may consider hedging their risk by purchasing options contracts or using a bear call spread. There is a high risk involved in the strategy of looping. This strategy involves supplying an asset, borrowing against it, swapping the borrowed money for more of the original asset, and repeating the process. Ultimately, it is possible to find a staking strategy that fits one's personality, but research should be done before committing to any strategy. This article provides an interesting overview of the different options available for staking Ether. The author outlines the different approaches for each personality type, from the dependable ox to the risk-taking tiger, which can help readers find the strategy that works best for them. They also provide a range of examples, from staking directly with Lido to using auto-compounders and yield farming. The article also touches on the potential risks of these strategies and encourages readers to do their own research. Ultimately, the author suggests that STITH could one day rival the traditional bond market, which is an intriguing proposition. Reaper Financial has announced that it is converting the USDC in its permanent drip fund to XRP. This is due to a potential depegging event caused by investors cashing out USDC and exchanges suspending conversions. This has caused USDC to temporarily trade below its dollar peg. Coinbase and Binance have taken action in response to the event. Ripple CTO David Schwartz has indicated the company is preparing an official statement. This article provides an overview of the USDC Depeg event and its impact on Reaper Financial and other stakeholders. Reaper Financial has responded to the event by converting the USDC in its permanent drip fund to XRP. Other exchanges and cryptocurrency companies have taken action, with Binance suspending auto conversions from USDC to BUSD and Coinbase suspending USDC, USD conversions. Ripple CTO David Schwartz has promised an official statement in response to questions over whether the company has exposure to the embattled SVB. Cryptocurrency markets experienced a sudden and steep drop on Friday. This was due to the collapse of Silicon Valley Bank, resulting in panic selling and liquidations of crypto-tracked futures worth over $200 million. Bitcoin and Ether rose up to 4% in the past 24 hours, however, other cryptocurrencies did not post similar gains. Market analysts have suggested that the risk of USDC being affected by the bank's closure is overblown. It has a treasury backing, with a theoretical floor price of 77 cents. This article provides a comprehensive overview of the recent market movements in the cryptocurrency space as a result of the collapse of Silicon Valley Bank. It examines the short-term impact on the prices of Bitcoin and Ether, as well as the panic selling that caused other cryptocurrencies to remain relatively stable. The article also reports on the liquidation of crypto-tracked futures, and provides perspectives from market analysts regarding the long-term outlook of the USDC token. Layer 2 networks are gaining traction in the Ethereum ecosystem due to their scalability and ease of use. Token Terminal reported a 30% increase in activity since October 2022. Polygon launched its beta version zero-knowledge Ethereum virtual machine. Base, another Layer 2 solution, launched its testnet in February and plans to launch its mainnet in the coming months. It does not have plans to offer a native token, yet several ecosystem participants have already expressed interest in building on Base. Arbitrum, another Ethereum Layer 2 network, functions without a native token and has $3.35 billion total value locked. The future of Layer 2 networks without a native token is uncertain. It may be successful if users are willing to sacrifice decentralization and censorship resistance in the short term. This article provides an insightful look at the growing popularity of Layer 2 networks and their potential to revolutionize the Ethereum ecosystem. This is demonstrated by the 30% increase in activity on Polygon since October 2022 and the launch of its beta version zero-knowledge Ethereum virtual machine. The article further explains the development of Base, a Layer 2 solution that allows developers to easily build applications without requiring an incentive mechanism. It is also highlighted that Base is investing in core infrastructure such as Ethereum Improvement Proposal 4844, to make the network secure and low cost compared to other Layer 2 networks. Additionally, the article compares Base's approach to that of Arbitrum, which functions without a native token and has achieved success with $3.35 billion total value locked. Finally, the article discusses the potential of a Layer 2 network without plans to implement a native token, as well as the importance of token models for projects with large developer and user communities.